Tax filing deadline is just days away. While most investors would know the rules on taxes around buying and selling stocks, it's not as simple with crypto assets. 85% of crypto traders surveyed by Wealthsimple Tax said they had little or no knowledge of how to report capital gains on their tax return. For more on this, we're joined by Evan Thomas, head of legal at Wealthsimple Crypto. Evan, thanks a lot for joining us. Young people certainly seem to be interested in crypto. In my experience, when I talk to them about investing, crypto is one of the first things they mention. Many of them have made an investment in crypto before they've made any kind of investment in what we would call traditional stocks or ETFs. The rules, I'm sure, from Canada Revenue Agency are the same as they are for stocks, that if you sell Bitcoin at a greater price than you bought it for, you've got to report that gain as a capital gain and pay tax on it, correct?
That's right. That's right. It's the same rules as for securities.
What is different, though? What is different, I gather from reading some of my notes on this subject, is that whereas if I sell shares of ABC Corporation for a greater price than I bought them at, and I made that sale in 2021, the brokerage sends me documentation of that transaction. That documentation includes my cost, my average cost base, and the selling price, and then it's therefore easy to determine my profit. And I believe the brokerage also sends that documentation to the CRA. In the world of crypto, I gather none of that happens. Is that correct?
That's right. There's no requirement at the moment for platforms to either issue tax slips to their clients or to report that information to the CRA, which makes the process of calculating your gains or losses a pretty manual process, particularly if you used a number of platforms or made a number of transfers or trades in the course of the year.
What do crypto investors need to know about staying in compliance with the law when they fill out their taxes?
Well, I mean, I think the first thing is they have to know that they do have an obligation to report any gains or income, even if they didn't receive those tax slips. So that's point number one. But they also need to know that they have to go through this exercise of calculating their cost base and looking at their dispositions and determining whether or not they had any gains that they need to report and potentially pay taxes.
Is there any simple rule of thumb for calculating the cost base? That can be tricky if you've been a frequent buyer of an asset, buying X number of shares and then selling Y number of shares or digital coins, let's say, later in the process.
That's right. That's right. I mean, it can be done manually, but it can be complicated. It's a pain point that we anticipated, particularly for this year. We added a new feature to our Wealthsimple Tax platform to effectively automate that calculation for clients to just import their transactions and calculate the gains or losses as may be for them automatically to take some of that pain away.
And that, I think most people would know if they watch television at all or are exposed to internet advertising, that Wealthsimple is making a fairly significant push into crypto advertising in ads that I assume are aimed at young people, that they can begin investing in crypto for as little as 50 cents, I believe. What is the pitch to young people here in terms of documentation?
In terms of documentation, well, look, we do whatever we can to ensure that our clients are set up for success in being responsible in their investing and ensuring that they have the information and tools that they need to be responsible in all aspects of their investing, including any investments they may make in crypto.
And I noticed, I actually helped my son, he's 18 years old, I helped him prepare his second tax return on the weekend. And I noticed as we shopped around, he had to do it in paper the first year, believe it or not. I guess that's fairly standard. The second year, he's allowed to file electronically. And as we looked around for tax filing websites, I noticed that Wealthsimple has an offering in that regard.
That's right. That's our Wealthsimple Tax product, which is a sort of self-directed tax preparation software. And as I mentioned earlier, now has this new feature this year that allows anyone who traded or invested in crypto last year to automate the calculation of any gains or losses they may have to report.
Okay, Evan Thomas, head of legal at Wealthsimple Crypto. Thanks very much for this conversation.